Hello everyone, welcome to this yet another edition of Market Rubaru. Today I have with me a guest from Bangalore, Kedar Kulkarni, whom I know for the last I think more than 10 years. And he used to have a very cushy corporate job in which he had, in fact, he didn't need to do anything else. It was that kind of a job, but he was into trading, and that is how we met. And we used to discuss a lot of trading systems, intraday options, positional delivery, everything. And over the years he has been jumping from system to system, but since last couple of years he finally found his aha moment and got hold of a system which he has been using now. And finally, about 1.5 years back, he took the plunge and he left his corporate cushy job and is now full time into the market. So
Hi, Abhijit.
can you take us through your journey in the stock market?
Sure. So as you started off by saying, I am basically a chartered accountant by education. I have been working in corporate roles for the last 20 years. Before I quit my job about a year and a half ago. So in these 20 years, I have worked with many companies, and as you said, it was a fairly. By the time I almost quit my job, it was fairly. I was in a fairly senior position with a very good pay, and it was just my passion that I had for the stock markets which really sort of pushed me to take this decision. Otherwise, I could have, if I had no other option, if I would not have had the skill to really trade the markets and make money, I would not have any other option but to continue my job. But I had the passion, and I paid a lot of tuition fee to the markets over these last 7 8 years, 10 years. I have, as you said, and you know me very well, Abhijit, because we have been like, I think we have been close to each other since last almost 6 7 years. So you have also been seeing my journey and have gone through, with, I mean, rather, you have witnessed whatever phases I went through in terms of various jumping the strategies, changing it, trying, testing things, and all that. So nothing is new to you, but for the audience. So yes, I did everything. I mean, as I look back, I virtually have done every type of trading that is there in the markets, be it stocks, be it currency, commodity. I've never done commodities, but be it stocks, FNO, currency, I've tried everything. Within that, I've tried intraday, positional, everything. As I look back, in fact, maybe the blessing in disguise was having done everything and in every fashion. It's sort of gave me a lot of insight into what doesn't work. So, limited point, Abhijit. Yes, I have tried and tested a lot of things. Took the best practices from all those learnings, all those failures. Okay, and kept on evolving myself. Okay, so limited point, Abhijit, is that as Thomas Edison said very famously, that I didn't fail 100 times. I succeeded in finding out 100 ways that don't work. Right. So
Yeah.
that was his positive attitude, and I also basically I'm a very optimistic person by heart. Okay, so I also kept evolving, kept on learning from my failures, kept on learning from my mistakes. Whatever it was not working, I rejected it, tried something new, kept on accumulating the best practices over these things. And finally, about a year and a half ago or 2 years ago, I would say, I more or less got the confidence that I have now sort of come to a stage where I can definitely survive as a full-time trader. Not just survive, but thrive. As in, idea was not just to earn a basic livelihood, but to live comfortably and maintain the style of living that I was. So once I got that confidence, I decided, let me take the plunge. And it's been year and a half so far. Things are okay.
And
I'm not
you
regretting
have
my
always
decision.
been in Bangalore, right? Just to give a background, you have, I think, educated in Bombay and then shifted to Bangalore, something like that.
That's correct. I did all my schooling and education in Bombay, and I was staying in Bombay for a few years before I moved to Bangalore. In fact, I have also had a brief stint where I was staying for 5 6 years in Gurgaon. So that was before I came to Bangalore. But basically, it's Bombay, Gurgaon, and Bangalore. So Bangalore since last 11 years now.
Okay, so coming to the system now. So finally, how did you stumble upon this system, and how did you sort of get that eureka moment?
Right. So see, as I was, kept on trying out many things: options, futures, stock futures, index options, index futures, everything. And within that currency also, I traded. Finally, I stumbled upon this concept of momentum. Okay, momentum, and within momentum also, there are many ways in which people can find high momentum stocks. Okay, what I came to, or rather stumbled upon, was the concept of ranking the stocks based on their historical performance. Okay, so
Yeah.
it was a that I believe was a very unique sort of concept that came across. And it's not that I suddenly embraced it overnight. Okay, not at all. Even that, I sort of tried it out, found that it was not working in this way. I removed it. I tried some different ways. Within that also, I did a lot of experimentation. Okay, finally, what model I have finally evolved, okay, is what I'm going to talk to you today. And I must
Yeah.
say, Abhijit, here, very importantly, that TradePoint played a very, very important role in my being able to adopt momentum investing. Okay, because had TradePoint not come up with a tool, or particularly a feature, not tool, but a feature within TradePoint, which is called performance based ranking table, which is what we are going to discuss today. Okay, so right, Abhijit, I must also add here one very important point, that TradePoint has played a very, very important role in my decision, or my sort of my journey of sort of embracing momentum investing, because TradePoint has this feature called performance-based ranking table. It's part of your RZone suite of softwares or scans. So this is a very important feature, and I remember I also interacted with your team, Prashant also, and you also. I had some inputs to give, and as always happens with Definedge, all my inputs were promptly taken on board. You already had, I think, you're already developing this, but whatever inputs I had, those were also incorporated. So it was really a great thing, a great gift from Definedge to all momentum practitioners, I would say. I am personally using this feature very, very actively for the last almost year plus, and I will of course talk in more detail in terms of how I exactly use it, but just to give you introduction.
Yeah. Okay, so once let's start with what how you use it. So maybe you can start showing what exactly you mean by ranking based system.
Yeah, sure, sure. So you are able to see my screen, Abhijit?
Yes.
Yeah, so this is the landing page that we get when we go to basically we start the TradePoint R zone, rather TradePoint. Now within this landing page, as for those people who are probably not familiar with this TradePoint or Definedge, this entire ecosystem, what happens is once you go to the landing page, there is something called apps. Okay, you click on that. The first option is got what you get is called R zone, which I am assuming stands for research zone. Okay, so when you click on that, you come to the RZone landing page. Okay,
Yeah.
within this RZone landing page, on the left hand side, you will see a lot of options. What we are interested is the RS scanner, which stands for relative strength scanner. Okay, so once you click
Yeah.
on the RS scanner, you come to the sixth item from the top, which is performance based ranking table. Now this is the feature that I'm referring to, and what is the backbone of everything that I do currently. Okay, so once you come to this this home page of performance based ranking table, I'll now, going forward, I will mention it as PBRT in short. So
Yeah.
the way I use it is like this. Before I actually click the buttons and tell exactly how I use it, I just like to give a little 2 minute 2 minute sort of overview of why someone is required to use this table, or what is the really utility of this feature. So see, every one of you knows that in the National Stock Exchange there are more than 2000 listed stocks. In BSE maybe there are even more listed stocks. Now obviously, as a trader or as an investor, you can't target every stock. You can't be party, you can't be a you can't attend every party, right? So you have to really focus and narrow down your choice of stocks significantly. You have to narrow it down so that you can really focus on those particular stocks where really the action is happening. Okay, so what I personally do is that within the 2000 plus listed stocks of NSE, the first and foremost filtering criteria I use is the Nifty Total Market Index. Okay, the Nifty Total Market Index is an index of 750 stocks, the largest 750 stocks. So I take that as my first cutoff. Okay, by doing that, automatically I'm rejecting all the remaining 1250 or maybe 1500 stocks, which are all very very penny stocks, small, kachara stocks, if I could call it. Basically, I reject all those stocks, and then I focus my attention to the 750 stocks, which is the Nifty Total Market Index. Okay, now within this Nifty Total Market Index 750 stocks, obviously the question again comes, I can't focus on all the 750 stocks because even 750 is a big number. So how do I narrow it down to much smaller stocks, say something like 50, 100, or at least within 100, that's still manageable for a day to day. So that is what I'm going to explain here as to how I do it. Now, for example, so I will start by showing how we use
Yeah.
it. One is market. Now market, obviously, generally everyone uses NSE, while there are other options. I always use NSE. Okay, that is one. Then period. Okay, so for example, one way you can use this software is, you know let me remove this ticks. Okay, so suppose your objective is to find out what are those stocks which are exhibiting the highest relative strength in the last 12-month period. So what you can do is, you can click NSE, you can click on the period, select 12. Okay, 12 is stands for 12 months. So therefore the
Yeah.
time frame will be monthly. Okay, 12 month. Look back period, I don't touch it, I just leave it as it is. Volume also I don't touch it, I leave it as it is. Weight, I make sure it is one for anyway, here it is only one period, so I will select one. And then group, which is basically the index, I scroll down and select Nifty Total Market. Nifty Total Market. Okay, this is the index
Okay.
of 750 stocks I was referring to. Okay, so this is all it is, and then I click on scan. Okay, then TradePoint will take maybe a minute or so for the scan to run, which is running right now, as you can see.
Yeah. So
So
it will
once
scan 750 stocks to gauge their performance over the last 12 months.
exactly.
Yeah.
Okay, and just so that I give a little little granular idea of what exactly is this number, that let me explain that also. Yeah,
Okay.
yeah,
So
okay.
this is the scan is ready now. You have all the stocks which are meeting the, I mean, the performance table is ready.
Yes. So basically, what the software has done in this last minute or so, when the scan happened, what it has done is, it has analyzed all the 750 stocks that are there in the Nifty Total Market Index, and it has found out the return that the stock has given, the price return, not the company's financials I'm talking, the pure
Yeah.
price return that the stock has given over the last 12 months. What it means is that, in simple words, okay, actually, I'll explain it in more simple. Suppose example, the price of 361, the stock price of 361 was 100 rupees 12 months ago. Okay, then today the price is 135.73. Okay,
Okay.
basically that is what the return is. If
Yeah.
the price of 3M India was 100 rupees 1 year ago, today it is 148.18. Okay, that
Correct.
way. So obviously you can appreciate that, doing this analysis by hand or by manually would have taken you, maybe 3-4 hours for just one scan. Okay, which is clearly not so. Basically the unique point of this software is, with the click of a button, it's giving you a ready-made feature of how this basically how the ranks are there, or rather how much is the return percentage for each and every individual
Yeah.
stock. Okay, so that is what this stock is giving. What you can also do is, some people, what they do is, and I know some practitioners, so they use two periods. They use 12 and 6. Okay, so they
Okay.
want to see not only the performance over the last 6 months, but also last 12 months. Then you can tick two boxes and put your periods. Then what it will do is, it will calculate the same return, not just for 12 period but also for 6 period. Okay,
Right.
so these are just various ways in which you can use it. But limited point is, at a click of a button, it gives you the rate of change, the ROC of that particular stock for whatever period you have prescribed. Okay, can I Abhijit, can I then now proceed to what is the utility of this ranking?
Yes.
Okay, so your question, the question that viewers may have is that, okay, we found out the returns, the 12-month returns for, let's say, all the 750 stocks, but how to use this data? Okay, for that, what I do is that, and almost most of the momentum practitioners do it, is that once you get this data, what you can do is you can export this file. Okay,
Okay.
when you export this file, you can, for example, let's say, let me open it. Okay, so what happens is you get a raw file. Okay, now
Yeah.
what you can do is, in this raw file, let me make it full screen. Okay, so what you
Yeah.
have got is the name of the company, the sector, the segment, the market, the particular index of which it is part of, market cap and all that. I don't think we need all this data for momentum. We need the 12 period, which is the column
12.
E. That is what is important for us. Okay, so what we do is, yeah, this is a normal number sheet, but I'm just showing. So if you sort in descending order, okay, it will,
Yeah.
in a click of a button, it will tell you which is the stock which has got the highest return in the last 12 months. Okay,
Right.
which is the stock which has got the second highest, and if you go right to the bottom, then you will see the stocks which have given the worst return in the last 12 months.
Yeah.
Okay, now how to use this data? What I personally have been doing is, I just to give a context of how I use this data. I When I do my own trading, my own investments, I practice momentum investing in a long term basis. Okay, so I use this data for identifying those stocks which have the highest return over the last 12 months, and I
Okay.
then invest in those stocks for a reasonably long period, and then I have certain cutoffs in terms of, or exit criteria, which I follow. But in this data is what really is the backbone of deciding how to identify the most high momentum stocks out of the entire family of Nifty 750. Okay, so so number one, I use it for my own investment needs, and I also do a training course. Some of you may be aware from my Twitter feed, I use this software also for the training course, because the same fundamental idea of identifying the high momentum stocks is then used by me in that course for identifying swing trading opportunities.
Okay.
Okay, so the bottom line is, whether you use this software for long term investment or whether you use this software for short term swing trades, the idea remains the same, that it basically helps you in narrowing down your focus from 750 stocks to maybe 20, 30, 40, 50, 60, 70 stocks, depending on what your comfortable is. But this is a fantastic tool. I have been myself using it for the last 1 year, and I swear by it. Okay, all the subscribers to my course have also started using it now, and they can see the benefit of this. So all I can say is that this is a really very useful feature for traders and investors, and I'm really thankful to Definedge for giving us this platform. And most importantly, from a practical perspective, this is a web-based tool. So you don't need to download anything, or it doesn't matter whether you have a Windows software, a laptop, or a MacBook, or whatever. It works on everything beautifully, and as I said, it's really a great feature. So
So even in this kind of a scenario, you would never have got a buy in HDFC Bank, right? Why I'm talking about HDFC Bank is because of what happened in the last 15 days.
correct, absolutely. In fact, if you let's search for HDFC Bank. Okay, the rank is 695.
Okay.
Okay, so you
Out
can
of
imagine
750.
it out of 750.
Yeah.
Okay, so what I'm saying is, while a lot of this could be relating to the recent downward phase, but I'm sure even before the downward phase started, the rank of HDFC would not have been anywhere, in the, maybe certainly not in the top 300, maybe.
Yeah. But then tell me one thing, every month you will get a maybe let's say you are looking at maybe 30 stock, but then the same 30 stocks will not appear in the next month. How frequently do you do this study?
Right. So, okay. So there are many, everyone has his own preferences. Okay. I personally do it every week. Okay. On every
Okay.
weekend. Okay. There are some people who do it every month. Okay. There are very few people I know who do it once in a quarter.
Okay.
Okay, so everyone has their own preferences. Okay, see, Abhijit, today we are living in the world of small cases, right? There are so
Yeah,
many small cases out there in the market, and every small case manager has his own nuances that he brings to the table. Okay,
right.
so just to give you a little idea, some people will use, some people. I'm not saying everyone necessarily uses this performance based ranking table, but the point I'm making is, irrespective of what tool you use, the basic concept is you can either do it on a weekly time frame. Okay, some people do it 52 weeks instead of doing 12 months, they do it 52 weeks because
Right.
maybe their frequency is weekly. Okay, some people who follow a monthly frequency, they may use 12 months. Okay, some people who follow quarterly frequency may possibly again use 12 months only, because I don't think there is any quarterly feature there. So like that, there are various. Then comes to the universe. Okay, I personally follow the Nifty 750 universe because I like to have a lot of micro caps in my universe, because those are the stocks that really outperform. So
Yeah.
I use Nifty 750. There are some small case funds or small case managers who restrict themselves to only to Nifty 500. There are some who use only Nifty 200. So again, whether it is universe or whether it is the frequency, everyone has their own permutations and combinations, and everyone can use this software in whatever way they choose to.
Yeah, but my point is, let's say you start today. Today is day one. You got a list of, I mean, let's say you have a capital. You have to allocate. Let's say you want to do only maybe 25 stocks out of 7. So you take the top 25, right? And you will
Correct,
divide your capital into 25 and buy them tomorrow.
correct,
But then,
correct.
let's say you have a frequency of every week. Next week, out of these 25, if let's say five have been replaced by some other five stocks in the top 25, then what do you do?
So you're right. Now that is where the concept of worst rank held comes in. Basically, what that means is, or buffer. You can call it buffer. So what happens is, the most simple way to think is, okay, if let's say there is stock number, let's say stock number 25, which was earlier number 25. Let's say the new ranking is 30. Okay, now
Okay.
question is, do you immediately remove it and replace it by the new 25? That is certainly an option. Okay, that you can do it. The second option is, you can keep some buffer. For example, let's say you start with top 25. You can say that till the time any of these 25 stocks don't go outside the top 50, okay, I will still
Okay.
keep them.
Okay.
Okay, now one of the advantage of this buffer is that, see, at the end of the day, what is this mathematics we are doing? We are doing a mathematics of relative strength. Okay,
Right.
sometimes what happens is, for no fault of a particular stock, okay, its ranking may go down just because there are some other stocks which have done even better than.
Right.
Okay, so what happens is, in such case, sometimes you may choose not to penalize that stock just for the sake of it. You may say, okay, I will give you a grace period. Okay, till the time you are in the top 50, I will not trouble you. I will allow you to remain. But the moment you go out of 50, then my tolerance limit is over. I will remove you and then put someone else. So those are the ways in which people can do it. Now again, there are many different permutations, combinations of this also. Some people may say, some people, let's say, may use 2x. For example, for a 25 stock portfolio, they may use 50. Some people may use 3x, like 75 example. Okay, some people may use only 0.5. They will say, no, if I have a 20, let's say I have a 20 stock portfolio, I will only wait till 30. Okay, not even 40. Now every person does this. As I said, this is again, every small case manager will have his own nuance coming in. There is no right or wrong answer. People do it what they feel comfortable with.
So there will be an exit rule also, right? But for example, if there is some stock which has given a very great outperformance over the last 12 months and you have it, but then some for some reason, technically, fundamentally, whatever, something happens and it starts going down. So you have a trailing stop loss individually, right?
Yeah, so again, now there are two things. uh, there are trailing stop losses also can be of two types, Abhijit. One is a purely ranking based stop loss, meaning, as I explained, unless and until the stock goes, let's say, outside 50, okay, I will not touch it. Now that's a ranking based stop loss. Okay, where
Yeah,
you are not really looking at the absolute price of the stock, you're only looking at the ranking.
correct.
Okay, that is one ranking based stop loss. Some people, they may say ki, I don't care what the ranking is. Okay, the moment the stock falls below 200-day moving average, irrespective, it may still be within top 25. I will still remove it.
Okay.
Okay. Now again, now what you call in this case the 200-day DMA will be called as a absolute filter, absolute momentum filter. Okay,
Right.
whereas a ranking based filter is called relative momentum filter. Okay, because
Right.
that ranking is, you can't pinpoint it to a particular number. You know, you have to do a scan only, then to find out.
No, why I asked this question is everyone knows that the last almost 1 year has been great for the stock market, and in fact, you were lucky to be a part of that in terms of momentum. There was superb peaks, but at some point, this will end, right? End in the sense, I'm not talking about a bear market, but I'm talking about there will be a big correction, or something will happen. Maybe who knows? Over the next 1 year, there will be no momentum. Maybe market will go down. Whatever. I mean, people love calling the top, but you don't do that. I know that, and that is also a good thing. But at some point, once, let's say, uh, the top 25 stocks all start giving negative returns, maybe week on week or month on month, finally you will end up with no stocks,
Correct,
right?
correct,
So there will
correct,
be a
absolutely.
period. Yeah, of course, it is also said there is always a bull market somewhere. That is also a very famous word which I have read. There is always a bull market somewhere in some sector, right? So maybe without any stock, maybe a real bear market, but you will still maybe find some stocks which are outperforming.
Correct, absolutely correct. In fact, I just, without getting into the specifics of my particular system, I can assure you, Abhijit, in my system also I have built-in rules where if a particular, let's say, if the overall market starts turning down, okay, and let's
Yes,
say there is no safe haven pocket, there is nothing for us to hide. Okay, there the system will automatically start taking me to cash, and it could be possible, like in a COVID like situation, it
yes,
it could have been entirely possible I would have been sitting on 100% cash. Okay,
yeah,
but as you rightly said, even in COVID, by the way, you have seen that phase of market, the pharma stocks were doing really well, right?
right,
So what could happen is, and again, that's for the system to tell us. I can't imagine or picturize anything right now, but what you said is absolutely correct, that even in a extremely bear market, there will be some or the other sector which will continue to throw high relative strength stocks, and if those stocks are, let's say, above my filter, then I will still buy them irrespective of what the market is doing.
right. So have you done any back test in a bear phase? I mean, COVID was not a bear market at all. COVID was just a very big, fast dip. But let's say something like a 2008, or have you studied what happened that time?
So, Abhijit, I have personally not done any backtest, but I know for a fact that there are so many research papers that are available on momentum as a subject. I mean, not just in US, but even in India. And there are some of people like like Anish Teli, who is one of the Twitter community member, and he so I know he, along with one gentleman called Rajan Raju. I know this because I have spoken to Anish myself. So they have also done a lot of research and scholarly research on momentum performance in India, and not just Anish. There are many other people who who have done this kind of back tests. So I have relied on them, and also the fact that there are so many small cases that are there and which have, over the period of 4 years, 5 years, they have done very well. That all of this collective data gave me the confidence that there is something in this momentum concept which is fundamentally working. Okay, and what especially appealed to me, Abhijit, was the fact that there is absolutely zero reliance on fundamentals. Okay, you are
Yes,
only and only looking at price, and the best thing about price is it is absolutely objective and a non-discretionary concept. There are no emotions involved, there is no storytelling. Okay,
yeah.
so and so falana fund manager is thinking this sector will do this, that. There is no storytelling, it's purely data and data alone. So that's what really appeals to me. I personally am very like a non-discretionary guy. I'm get very uncomfortable in discretionary setups. So for me, this is another major attraction, that there is no storytelling, this is purely data, and everything has a very crystal clear mathematical formula behind it.
So another doubt which I have, in fact, I definitely a lot of viewers also will have. Let's say, I mean, maybe in some scan. weekly or monthly scan. Let's say out of the 25 top performers, you have, just as an example, maybe 15 IT stocks, or I mean, very heavily loaded in one sector. So you'll still not bother. You'll still buy all of them.
I will buy, I will buy all of them. I don't look at, even if all 25 are IT, I will buy it, all of them.
Yeah, in fact, recently that's why PSC sector, all that. I'm sure you must have been heavily loaded in
So,
PSC.
yes, in fact, out of my 25 stocks, I think 10 stocks are that out of the 25 stocks that I have currently, almost 10 are public sector holdings, Abhijit.
Okay.
Okay, so and by the way, out of those 10 public sector holdings, almost 4 or 5 are railway stocks.
Oh, I see.
just to just to tell you how, but then this is what happens, Abhijit. See, once you decide that you don't know anything and market is the supreme boss,
Yes,
okay,
absolutely.
then you have to literally, keep your brain aside and follow whatever the market is telling you.
You have to use your brain only to divide your capital by those numbers. That's all.
Exactly. Or I would say you only have to use your brain to set up the initial rules. Okay,
Yeah.
what is going to be my universe? What is going to be my portfolio size? What is going to be my frequency of rebalancing? All those are initial variations and parameters. Once you set up that, and once you basically create a system out of it, then you have to keep your brain out.
Yeah, in fact, this is something which is really the discretionary part, because what happened is you have your own set of rules for entry. You also have your own set of rules for exit. But then entry is fine. I mean, let's say someone decides I have maybe 50 lakhs, and from 50 lakhs I want 25 stocks. So which means 2 lots, 2 lakhs each per stock. That is fine.
Hmm.
But there can be exit rules. There can be partial profit booking rules. I mean, that is all subjective in terms of, not subjective. It is discretionary, where someone can devise their own rules that I need to book profit from time to time. Maybe if some other stock come in, I need to have capital to buy those stocks. Something like that.
Absolutely, absolutely, absolutely,
So
absolutely.
that is all discretionary. So there again, you need to use your own brain, and I mean, to juggle your portfolio, juggle your account, and
I
how
would,
to use your
I would
money.
I would put it slightly differently. Maybe discretionary is not the right word. I think subjective, the word that you use, is probably better, because
Yeah.
see, everyone will have their own different subjective exit criteria. But once the exit criteria is decided by that individual user, then there is no discretion. Then you have to follow it.
Right. Yeah, that's right.
Yeah.
Yeah, it is subjective in the sense. In fact, like you said, maybe keep those 25 for as long as they are in the top performers with the full holding or partial profit booking, and keep some allowance to add maybe 5 more stocks. That is completely an individual decision, and
Yes.
everyone to each his own. That is for the person to decide his own rules.
Right. In fact, I would in fact also tell you here one thing. Almost all the small cases that we have in the market today, they necessarily do a rebalancing. What is the difference between rebalancing and review? Okay, I do a weekly review. I don't do weekly rebalancing. I'll explain the difference.
Okay.
The difference is, when you do a weekly rebalancing, what you're doing is, for example, let's say initially you start with 20 stocks of 5% each. Okay, now let's say one particular stock in that, let's say, rallies lot, and the weight
Hmm.
of that stock in the index increases from 5% to say 6%.
Ah,
Okay, what will you do is, you will book profit to the extent of that 1% and put it
right.
in some other stock where maybe the stock has gone down, where the contribution has gone down to 4%.
Yeah.
Okay, I'm
Yeah,
just
that
giving
is
an example.
rebalancing.
That is,
Yeah.
and because of that, what happens is, a lot of times on a Monday, or generally all these heavy traffic days, you will see a lot of stocks making abnormal pricing patterns, because this is all because
Hmm.
of the small cases. Okay, I personally,
Okay.
what I do is, I don't do any rebalancing. Once I buy a stock, then if even if the stock doubles, triples, or quadruples, I will keep it with the original quantity only. I will only exit it once my final absolute exit criteria is hit. That's the difference I was talking with between review and rebalancing.
Yeah. So just out of curiosity, I'm not, of course, we never talk about returns and we never talk about actual money, but which have been your outperformers in terms of at least percentage rise?
So, for example, stocks like Suzlon. Okay,
Yeah,
they have it has gone up. There have been times, I have booked, I have exited, and I have re-entered. But if you really look at in terms of the overall cumulative return, Suzlon is one of them. Then stocks like actually Titagad, which is a railway stock.
railway.
Then you have like that. In fact, Abhijit, I mean, they, those who are interested to know, they can even go to my Twitter feed. My trade journal is published live there, so it's been
Yeah,
190 days as of today. Today will be the 190th day. I'm publishing it every day, so anyone is free to go and look it up for themselves.
yeah. Okay, so that's a really very systematic study of momentum investing, and it's just what about half an hour every week, or maybe 1 hour every week. That's all.
uh, yeah, half an hour, yeah, I mean, since I'm using this software, it's maybe just few minutes, actually, not even half an hour.
Okay, so within few minutes, you identify what is to be done, or whether anything has to be done, or nothing has to be done next week. That's all.
Exactly, exactly, correct, correct.
So you are free to do anything of your own.
Yes, and that's what that's what I keep doing. I keep posting my Netflix reviews.
Yeah.
No, and no, on a more serious note, Abhijit, see, I always see, I believe in this concept of, everyone talks of return on capital, return on investment. I talk of something called return on efforts. Okay,
Yes.
if there is some person who is sitting in front of the screen for 6.5 hours every day, burning his blood, increasing his BP, and then earning 40% return, I'm just saying, whoever is that person is, okay,
Yeah.
that is one criteria. And let's say there is some other person who doesn't look at this, who doesn't even have to look at the screen for the whole day, for the whole week, who can do whatever he wants, he can travel around, he can go anywhere and not worry about what is happening in the market because he has nothing to do, and that person earning even 25% return. I would say the second person is more better.
Yes. Yeah. This return on effort is something very unique. A lot of people don't even know about it actually.
Yes, yes. So the point I'm trying to make कि मैं I keep saying on Twitter कि मेहनत करके तो सब अमीर बनते हैं, बिना मेहनत करके अमीर बन के दिखाओ. And of course, and of course without doing anything illegal, but that goes without saying. But the point I'm making is pura, that is my objective, and which is something which is really helping me, this momentum journey, without looking at the screen for whole weeks. you know Things are just happening, and I'm just, that's what really is the best part.
So this is what almost 1.5 years that you have been doing it, or even before that.
Nee, so I have been doing it for last, I would say, 2021 sometime started. So been about 3 years. From the I'm saying from the very initial time I got the concept of momentum into my head. From that point, it's almost been three and a half years. But this particular entire fine tuning that I've done, and this, whatever system now I'm using, I have been using that for the last, I would say, year plus. And
Okay.
the trade journal I started publishing from April of last year, so that alone has become now almost 10 months now.
Okay. So basically, you started using it 3.5 years back, and then once you developed your confidence that this can work, and once it did work for almost 2 years, then you decided to take a plunge and quit your job and
Yeah,
made
just
it
a
your full-time
correction.
market.
Just to correct you, Abhijit. From last three and a half years, I have been introduced to the concept of momentum. Okay, and I
Okay.
have tried momentum in various, in terms of various strategies. Okay,
Okay.
but this particular strategy, I finally, shortlisted and fine tuned and finalized about a year back.
Okay, so yeah, so that's a very, I mean, this is a lesson in itself, how you have to do it yourself. I mean, there are so many avenues and resources possible in the market, and so many, you can look at a lot of videos and all that, but finally you have found out what suits your temperament. That is most important. There is, in fact, this all again brings me to something which I always say, that there is no point in copying someone. It is something which you might copy an idea, but finally you have to fine tune it to your own temperament. How much, like you said, how much effort you want to put in, how much time you have, how much capital you have, and that is what stands out for me.
Yeah, yeah, agree.
Yeah, so it was a very interesting session in itself. I mean, how to shortlist the stocks. So I hope and I strongly believe that a lot of people should start using this kind of method in terms of shortlisting stocks. And once you look at the total market, which is 750 stocks, that itself is you are identifying that you are not looking at penny stocks or like you said, kachra stocks. Kachra is a bad word, but then there are stocks which,
Yes.
typically the stocks which go from circuit to circuit. UC for 10
Yeah,
days and then LP for 5 days.
right. And just to, I would put it differently, slightly differently, Abhijit. I will say a institution like NSE, okay, has already done all the hard work in
Yes.
filtering out the so-called smaller stocks. Why should we try to second guess things? Let's use the
Yeah.
hard work done by NSE, and that was my point.
Yeah. So I think that's a very important lesson today, and this was a very basic idea which he has presented. But there's a lot of fine tuning which can be done based on, like I said, your own temperament and whatever you can understand about the market. But the basic idea is make your own system and then just trust it. And like he said, in fact, he does it only a few minutes every week, and he's sitting on a good amount of returns. Of course, the market has helped, but again, like you said, even during COVID. Lot of stocks were replaced by pharma stocks. Then I think FMCG and IT stocks would have come. So in fact, those are the three sectors which started leading the uptrend after COVID, right? Pharma, FMCG, and IT, and then slowly other sectors also joined in. So this is a very classic case of momentum investing, where in fact I have a difference of opinion in the word momentum investing. It is actually trading itself, isn't it?
Yes,
You might hold a
yes,
stock for 2 years, but finally you're going to sell it at some point.
yes, yes. Agree, agree.
Yeah, so thank you, Kedar, and I'm sure a lot of people will benefit from this. And in case you have any doubts, you can comment on this video. Do share and subscribe to our channel, and you can ask questions to him. We'll give your Twitter handle also. We'll tweet about it. And thank you so much.
Thank you, Abhijit, and thanks for giving me the opportunity to share this, and come on Rubru. Thank you very much.
Okay, thank you. Sure. Bye.
Bye, bye.